So we are transmitting right after Memorial Day in United States. It's 31st of May, and today's episode will be devoted to the current situations on the economic calendar data. So where we are right now regarding the state of the economy. We'll just look through a different spectrum of ratings and economic gauges. The countries I would like to look through are right exactly being pointed out here, and right after this I will just tell you about some updates regarding the channel. So we'll just skip the subjects of economy view and also a crypto outlook that will have its extended time in tomorrow's episode, but right now I would like to focus just on the economic data and also updates, as I had just told you. Alright, so let's begin. Alright, so we are getting straight to market mover section, and inside of which we have economic calendar that has shortened in ratings publishing for US, as we had a holiday on Monday. So right now I would like to have a look at what happened beyond this, and we have from EA economic sentiment ratings been published, and inside of which EA Economic Optimism Index has dropped to the level been seen recently. It's 105 points right now, and we are surely getting back to the levels been seen right during summer of 2021. Right now, general confidence remains at levels seen right back few months ago. So despite this, we could find that the economic uncertainty index declined, and also the employment expectations indicator edged higher. So it means we are slowing the tendency right here, but there is still quite a chance to test once again those levels of 100 points right before this pandemic broke out. So this slump is quite steep right now, and I would observe rather to calm it down right around those low hundreds area rather than to recover and seek new highs at 120s. Regarding the most important indicators that are bolded right here now on red, inflation rate from Germany seems like be peaking, but still still climbing up. So in terms of 10-year tendency, we are right now getting back to the levels that haven't been seen since nearly 30 years, and right now this 7.9% is highest since 1973-74. So yeah, it's even over 30 years that the gauge hasn't been seen. We have officially got past those 90s levels, and right now heading relentlessly to those 10% in the coming months. So inflation rate is not stopping in euro area, and that's something that may put some governments in troubles. On Monday also we have had an unemployment rate, but it's still in Japan at quite satisfactory level. We are heading back towards those levels pre-pandemic time. Right, so let's have a look at what is going on Tuesday. Right here, inflation rate in France right now is surging once again, as it been noted in Germany. So for May, we have the tendency to get quickened, and there's a high chance we will level the 80s times crisis time, where there was a huge inflation running out since early 70s by early 80s. So there's a some of a likelihood of repeat of a repetition of this situation once again. In terms of, however, inflation rate year-over-year flash for Euro area, we are right now heading towards 8.1%, and right now those gauges has also increased, and these are the highest levels that have been seen in Euro area since its beginning. Looking once again at GDP growth rate for Canada, it's a quarter-over-quarter gauge. Right now, we are expecting this one to get to 5.6%. So it will mean that we'll slow down for a while in a quarter first of 2022. But it's a high chance that the Canadians economy get back to those levels being seen before this pandemic broke out. So there's a chance that Canada will maybe slow down with a growth of a GDP for a while, but eventually will head back to those low positive levels. On Tuesday also we have S&P K-share home price year-over-year gauge that will point out whether we have to worry about the prices of homes around US. Right now this gauge is showing us that we are peaking back there in March. I would rather expect this gauge to slow down for a while and we'll get back to those low 19s levels, but it will be very important to find out how it will finally turn up, as this kind of a indicator of what are the sentiment around the US economy at all. So this very important thing to watch. Right, so let's have a look at Wednesday. On Wednesday, with a beginning of June, we have unemployment rate from Euro area, and this one is expected to level at 6.8%. And with this one gauge, we do expect this indicator to normalize around those areas. So we have turned back to where we were back before this pandemic broke out. Right now we can see that we are even at the lower levels than it was back then in early 2020s. So it's very optimistic for Euro area. From Canada, however, we have interest rate decision, and with this inflation climbing up, we have still an area for the Bank of Canada to hike its interest rates, and there is a forecast that it will be grounded back around 1.5%, and that means that we'll get back to the levels been seen recently in early 2080s, right when the market, the major indexes in US has gone through downturn. So right now we are observing that Bank of Canada also announced it will end reinvestment and will begin quantitative tightening back in since April. Right now we can find that the size of the balance sheet is declining over time, and it's exactly the time where we should observe the possibility of the tendency of interest hike to get even worse. And as it's the beginning of a month, we have also ISM manufacturing PMI data, and we still expect this one to normalize right above 50-ish levels, so it means we are still expanding but not contracting. So it means the recession may be postponed in time. We don't observe in this gauge any signs of a slowdown, so it's also very important to watch if you're interested in what the economic sentiment really is. Right afterwards, let's have a look at job openings. That's exactly one that should also normalize right around 11.5 millions. On Thursday, however, ADP employment change, and this gauge exactly is expected to get lower as we are heading back to these levels of where the economy approaches full employment levels. Also labor supply shortages, meaning that no matter how big the employment is, we still could find that there will be some of a difficulties in reaching some of a supply. So exactly, this also is an important gauge to have a look at. Afterwards, we have initial jobless claims, and also from US some of the policymakers are speaking right in the evening. This is Thursday. Let's have a look at Friday. And on Friday we have important data from Germany. This balance of trade that recently suffered a bit, but is also expected to get normalized. And right afterwards we have unemployment rate, non-farm payrolls, and ISM non-manufacturing PMI. So we can observe that the second half of a week is bringing us some of an important data from US economy, and regarding that we are taking an active steps on the market that will be important to take a notice on that. As of right now, I'd like to present you some updates regarding trade idea section, and there won't be any proposition of a trade for this day specifically, but I would like to rather focus on what are the new aspects regarding this section, and inside of which I will show you, as you can find on the upper level side of a screen, and there is a different gauges, different or rather ratings, whether this possible trade or investment is likely to succeed in a short-term, medium-term or long-term horizon. And it's quite intuitional, so since next episodes I will show you this panel of different time horizons, and by them I would attach different types of opinion regarding different time horizon. So when that will be, for instance, an X by a short-term horizon, it would mean that this investment is not really recommended in this type of a period of time. In terms of another one, if I'd like to just present you, that will be, for instance, the medium term, and if there will be a flat line, it would mean that there will be no specific opinion regarding this time horizon. So and also in terms of long term, if there will be a tick, it would mean it's quite recommendable in my opinion. So in terms of every single investment I will present you regarding the trade idea, I will attach different types of opinions regarding time horizons. I would like to show you, and whether it's X, it means cross, or flat line, or tick, you would find out which type of investment it is. So it will clarify to some extent my consideration of possible investments. So right now I would just leave you with the update, but at least I would like to have a look and take my point from where we are right now at DXY, as to observe this one indicator of the risk on, risk off tendency. So on DXY we are right now trying to revert the tendency of a bear slump. However, we haven't really has reverted from any specific area, so we are just reverting recent move where the volatility was lower back on Monday. So I would expect this one DXY gauge to pivot back to the levels of hundreds, and right back slide even lower back to low hundreds levels, where we have a support from 20th of April right over. So on DXY we are right now trying to revert this risk on tendency, but it shouldn't be succeeded, as we don't have any pivotal structure and that will stay for possible longer reversal. So I do observe that this week will tell for rather the risk on tendency rather than risk off. So it means for US indexes to move higher in the coming days. Right, so thank you very much for watching. If you have any question, just put it in the comment section below the video. So if you have enjoyed my content, just click a subscription button. So thank you and see you tomorrow.